In this video, guys, we're going to look at how you can compete with the big banks in Forex trading. Hey traders, a very warm welcome to you. So, how can I compete with the big banks in Forex trading or as a Forex trader? Listen, you cannot compete with them under certain circumstances. They are massive. They've got massive amounts of capital. They've got massive amounts of resources, huge amounts of analytical power. Just everything is just on a huge scale compared to us as retail guys. No matter what size your account is. I don't care if you've got 10 million quid in your account, still nowhere near the level, right? So we need to think, how can we compete on this playing field? It's like stepping into the boxing ring with a heavyweight fighter when the most experience you've had is a couple of scrappy fights in the school playground, or when you were kind of on a football rugby pitch, whatever it may be. It just makes no sense to compete on their turf. If you're going to compete, you've got to think of where you've got your edge. So where is the edge as a small retail trader? Listen, comes down to knowing when to pick your spots. Trade when you have an edge. Now, this is banded around loads of times. Trade when you have an edge, you've got to have an edge. So the key here, guys, is to know what your edge is. What is your edge? Let me give you some examples of what your edge could be. It could be, I'm very good at spotting when traders are trapped in a trade and a reversal may happen. We've seen that a couple of times with a lot of currency pairs. They've been caught, a lot of traders who know bigger traders, hedge funds have been caught in the carry trade. It's unwound. Massive opportunity for retail because you're out of the thing. A lot of hedge funds are stuck in it. They're unwinding it for whatever reason. You can press and press and press it and make a lot of money on their pain, so to speak. You may also know it from a short-term perspective, fake outs. You're not getting sucked into those. You're actually fading those. You're actually selling into liquidity that pushes into highs. You know that banks are probing these levels. You know that money's flowing and stopping. You know how it's working. So you're understanding what your edge is. Perhaps your edge is trading immediately after news because the volatility, banks can't get involved in it as much because liquidity is low. It's all over the place. Maybe you've spotted an opportunity for that. And I have done a video on a non-farm payroll strategy in Forex if that something interests you. So it's not stuff like, hey, I'm just good at reading charts. You've got to go one extra level than that. You've got to say, hey, I'm very good at trading. This makes the fun example. I'm very good at trading a bull flag pattern because a bull flag pattern is, and we'll sort of move nicely into this, use them to your advantage, is money flowing aggressively in one direction, in this case to the upside of the currency pair. Pausing, and then continuing. So I'm very good at spotting when money is flowing in from the big banks and I'm using them to my advantage. So whatever pattern that may be for you. What we can't say is I'm good at predicting where your US dollar is going to go. I'm good at predicting this. It doesn't cut it. It's nonsense. We're going to compete with that on prediction. Even these guys get it wrong, right? And they can't even predict where markets are going to go. Look at all the analysts talking all the time. They're often one end of the scale to the other. It's going to go up, it's going to go down, it's going to stack in the middle. Nobody knows. Okay, but there are certain circumstances where we do have an edge as a trader and we've got to stick to those circumstances. So using this to our advantage is this. We know that they've got to push money to work sometimes. They might have an order that's come in, they've got to put to work. They might be stuck in a position. They might be having to buy a certain amount because they need to allocate it to a specific asset. They are forced to trade a lot of the time. We are not. So when we see that supply-demand imbalance, we know that their motivation is to get into the deal, not to get the best possible price. Of course, that is part of the motivation and that's where they get reward, but ultimately they need to get into the deal because they've been given the order or whatever it may be. We don't. So we can wait for the time when they are weak in that aspect and follow them and follow the coattails. Now, does this happen all the time? Of course it doesn't, which is why we have to pick our spots and why it comes back to knowing what your edge is, knowing what that is on the chart, what that is, whether there's a fundamental mix into it, whatever, or there's a catalyst as well. Don't be arrogant. So listen, this is a lot of traders. We have confidence as traders. We have to be. There is a fine line between confidence and arrogance. I get it, but being humble enough to know that we have no chance in competing against the banks if we play them at their game. If we're trying to predict something, we have a low chance of success. If we're trying to overanalyze where the euro is going to go in the next X years based on the economic data, we we don't have an edge there, right? They have far much more data, far better analysts than us. And over time, you might get it right in the short term, but over time, you know, we can't win, and they don't win very often over a long period of time. So it's having the arrogance and say, well, don't be arrogant and saying, listen, I'm very small in this massive big pool, but I know that I can just grab little bits. I can grab little bits here and there if I wait for the moment in time. Little fish swimming around with massive, you know, sharks, great whites. You can keep out their way. You wait until they're all done, then you see something, grab it, and that'll keep you going for a year. What's completely worthless to them will keep you going for a year. You know, a couple of $100,000, quite nice to us. To them, they're not that bothered about it. I want to understand your limitations. So recognize your personal weaknesses as a trader and personal strengths. Going back to this point here, what is your edge? Where do you really excel? And maximizing that, especially in Forex, guys. Forex is unforgiving. It's so unforgiving, you know, because it's trading so much, because there's so much out there, and it's portrayed this perfect utopia of trading. It's very challenging, but there's opportunity there if you're very self-aware and know, hey, I've not spotted anything. My edge is this. I've not spotted it for the past 4 days. Oh, great. There might be an opportunity now. I get the edge. I couldn't quite pull the trigger because my final checkbox wasn't ticked, and being very strict with that. Then keeping detailed records. Basically, it's a similar kind of thing. What you can do is keep detailed records on what's working for you, and then extrapolate that into future trades. So you're trading a specific way, the currency market's trading in a specific way. What's working when you kind of fit together nicely, and when will you spot those opportunities again to make money? So it's being very detailed and keeping detailed records on your trades and what's working, because you can bet that the banks are doing that. You can bet that they've got massive departments, huge 100-people departments into keeping records of their own trades and how they're executing, how they can improve and stuff. So we can compete on that, because as long as we're doing it with our edge, we can make sure we're refining our edge consistently. And the final thing is, don't bother listening to analysts, guys. They haven't got a clue what's going on. It's just a prediction. A lot of the times they're putting out false information because they're trading the other way. A lot of times they're putting out information just to get into the news. A lot of the time they've got a junior running it and they don't care what he says. Like, he's got a job, stick him out there. He looks good on TV. She looks good on TV. Great, gives us some publicity, and it gives us some airtime, some free kind of PR. They don't listen to them. They're not giving you any advice that's tradable on, and it just ends up clouding your judgment. Focus on this, right? Focus on developing an edge, whether that's technical and fundamental, or technical and catalyst, which is kind of my preferred way of doing it. Once you've got that edge, maximize it, double down it, and that is how you can compete with the big banks. It's staying out of their way, recognizing where they're weak, where you're strong, nailing that edge, keeping good records so you can improve on that edge, knowing your limitations, not being so arrogant, and finally, don't listen to any of the analysts. See you next one, guys. Take care. Bye-bye.